Hey guys, happy Sunday. Wanted to get a review of a trade I had out last week. Traded Facebook, so I wanted to review that trade. That was on Friday, I believe, that I traded Facebook, and I just wanted to do a quick review on it. Um, so, like we always do, let's start with the market. We all know, you know, things haven't changed with the market. It's super weak, so you can see here on the futures, it was definitely weak. Had opened below a key daily level and was breaking down. If we go to the sector, XLC, same thing. Had a gap down, opened well below the 21, and closed pretty weak during the day. So on Friday, obviously we all know Fridays can be volatile. One of the main things I was looking for on a stock to trade was if there was in a squeeze. That's what I like to trade, right? Is stocks currently in squeezes or breaking out of squeezes. So you can see here, I looked at Facebook's daily chart and you can see it had been in a squeeze for the past few days and it was in the process of breaking out of that squeeze. And once again, if a stock's breaking out of a squeeze, it usually breaks out of the squeeze uh, in 6 to 8 bars. And it only had broken out, right, 2 bars. So I was looking for that third day for Facebook to break down. You can see it had opened below a key or opened below a key daily level here, right? The green's the daily level. I knew the next really big daily level was going to be this 306 level. So my thought process going into the trade was this: it opened below a daily level. What's the next area of support? And then if it bounces, what's going to be the next area of resistance? So looked at the daily chart, and then I went to my 5 minute here, and let me just scroll out. So here is a green line that had broken down. It had opened below. Here's your daily level. So then I looked where it was opening at here, right? Um, and then what I wanted to find out was, okay, the market's weak. What's the next area of resistance Facebook has to break through? Because I knew going back to the daily chart, if it opened here, well, there's an area somewhere in here it's got to break through to get back towards that key level of 322, right? Because this was your daily line. So when I went into my 5 minute chart, it opened here. Where's your next area of resistance? Where's your next area of support? So I looked where it was opening at, scrolled out, scrolled back a couple days. There's no support here, right? It broke down through that. But now, once you get into pre-market or post-market on the 19th, you can see, what do we have here? We had an area of support, right? Bounced off that level and came back up. So now that support area on the 18th turned into my resistance area on the 21st. So I plotted my line here. That's that black line right there. So I'm like, okay, if Facebook can break through that support area, then it should get back to 322. Plotted resistance there. So now, where's my next support level? Right here. Um, this was my next support level here. So I knew once Facebook got down here, if it broke through that level, then I knew that was going to be my next support. So what I did is I waited on Facebook to break up during the day. And I knew that 318 was going to be a key level. I actually called this out in the chat, in our chat group. It literally hit it, came right back down. The only reason I didn't get into this trade was I actually was in the middle of a presentation. I couldn't actively trade, so I didn't bother getting in it because I couldn't watch charts. But it came back down to 318. And then what's this here? This is called a tweezer bottom. You can see um, we had a we had a red bar come down. Your green bar came up, even bars, and then it bounced off. So then I plotted this as my intraday level of support. So now going throughout the day, I'm like, okay, we've got the resistance plotted, we got the support plotted. If it breaks through this level of support, then I'll enter a trade. So as we went throughout the day here, there's your support level. Went throughout the day. Now it starts nearing this support level. I said if it breaks, I'm going to enter, right? A couple of things I looked at here. This candle right here is a reverse pin bar or a gravestone doji, right? Basically meaning we had resistance and it opened below that key line. So I entered, I think right here around 309. And then I exited the trade right here around 308. It was about a 10-minute trade, and it's about a 10% return. A couple reasons why I exited it. So you can see here, yes, the stock wasn't in the squeeze, but we had the stock breaking down or breaking out with selling pressure. And we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We had 12 bars. So it kind of more than lasted, right? It had a longer increase of those red bars. So I wanted to get out because I didn't want to wait for that selling pressure to start subsiding. And essentially, right when I had got out, that next bar is when it kind of went back up. It started subsiding. So that's one reason why I got out. Plus, if you looked at the SPY and the Q, they were starting to hit that bottom Bollinger Band. And if we look at the VIX here, remember VIX is that fear index. So if you look at the VIX, when I got out, it started breaking back above that midline and started trending back up. So I wanted to get out of the stock then. So that's the reasoning for my exit. And just to briefly go through even a more playa setup is you could have waited, been a little bit more patient. You see where the stock was squeezing at? So the stock's squeezing here, right? And remember, you've got key setup is a squeeze. You want divergence, and then you want a candlestick pattern. If you've got those three with the market behind you, that's the formula for a really good setup. So you can see here, stock was squeezing. This right here is what? This is called a bearish engulfing pattern, right? Smaller green bar, larger red bar, right at a key level, which is huge. Then you had buying pressure or selling pressure coming in. So you could have entered at the close of this bar right here. Yeah, it would have came back up a bit on you, but you could have entered around that 307 mark, and then it just dropped off and it got down to 304. So that was a quick $3 move you could have been in and out of. If you were a little bit more aggressive, you could have entered right at the open of the 309, and then if it closed above that, you could have gotten out. So you literally would have had like a 5-cent difference here if you would have gotten in there. So that's my review for Facebook. Like I said, if you guys have any questions, comments, concerns, you know what to do. Hit your boy up. Get your study on today. This next week's going to be pretty interesting with the meetings coming up, earnings, trade smart. Definitely still below that 21. So I'm not really looking for any swings when it comes to calls or very bullish on the market as of right now. So I will talk with you guys later.